Geoffrey Odundo, CEO of the exchange, joins us now. Geoffrey, it's George in Kigali. Definitely a pleasure speaking to you. I would just like to know, before we get into specificities, how worried you were about this particular results, given the kind of environment we had in 2017. Did this come as a shock to you, or were you sure that you would be above surface?
Well, I think we've seen a very positive turnaround. We anticipated that 2018 would begin strongly, given that a lot of the challenges we faced last year, especially around the elections, we seem to have been getting a clear direction. So for us, this was not a huge surprise, something that we expected within this quarter.
Right. In regards to your performance, this has been entirely attributable to positive investor sentiment, but we seem to have a bit of a lack of understanding on how consumers have reacted. First of all, we saw Safaricom, we saw issues on boycotting, people still went there. Banks, some banks people are investing in, some are not. So in regards to an overall look, what would you say drove these numbers?
Well, the turnover in 2017 was largely driven by a strong interest in really across all sectors. Primarily, the key drivers were the financial stocks and the telco stock as we speak. I think a lot of investors had priced in the political risk. They'd sort of taken a premium on that, and what they could just anticipate was that the companies were fundamentally strong and would continue performing better. If you look at the financial stocks, for instance, I think a lot of banks, in realization that the capping law had come through, were quickly able to remodel their businesses, and hence focus more on that interest income. And these investors could see was going to probably give them a resilient performance to the end of the year. So, in that anticipation, investors took quite some positions with a bit of more of a long-term view to just manage to navigate the political environment, and then hopefully see how the banks will perform, how the companies will perform in 2018.
Right, I have 2 points I would like you to expound on. The market is currently trading at a PE ratio of about 14.9 times, and average foreign participation dropped to 51%. Is there any correlation here, and what happens to the former? We could be trading at a possibly higher private equity ratio?
So it is true. We've seen a price recovery across all counters. Today, the market today is a bit weighted towards the telecom stock, which is Safaricom, which has a weighting of in excess of 40%. And that, given the current rally we've seen in that price, then it does pull up all the multiples of the other counters in the other sectors. But having said that, the 51% foreign investor activity is really within what we call our normal range. So between 50 to 70% is where you see this number oscillate, and we've seen it hasn't really dropped. I think it's more around what we consider a normal activity. So the correlation there would be, one, the current multiple rise is just as a result of price appreciation across all sectors. And the investor activity is primarily normal. It's nothing that we are very concerned about.
All right. 2 things now as we move on. What happened to the launch of the derivatives market? We haven't heard about this in quite a while.
Yes. I think I'd like to put that into context. I think we had initially projected that this market would come into life way ahead of 2016, and a lot that we had planned did not work as expected. More so around the development of the infrastructure, the capacity building, all our efforts towards making sure that the products and the designs that we bring will probably be very reflective of the local investment environment. A lot of that we had probably put it in plan, but not clearly. The experience was that it needed more time. And so all this has been done. We've had a very heavy investment in infrastructure, the technology, getting the requisite approvals. The processes have been going very well. And what is now pending is just to get 1 or 2 clearances to move on. I must say that we do expect to see this happen fairly soon, possibly this year. We've worked and very, very well with the Capital Markets Authority to get the requisite approvals. And it's something that we're very passionate that we're going to be able to deliver this particular year.
Perfect. Now, moving on, we have the Building Africa Finance Seminar. We'd like to hear more about this, particularly because we've had a tough time consolidating East African exchanges, but now we're going to discuss the entire continent. Talk to us about this and what we should see as a priority during that event.
So the Building Africa Financial Markets Seminar is a convergence of the 28 exchanges who are members of the Association of Stock Exchanges of Africa and the capital market partners. So in this forum, we bring together the exchanges, the CSD, fund managers, brokers, all capital market partners in the various jurisdictions. Now, what the seminar aims to achieve is that it is a capacity building seminar where we discuss topical issues that affect our various markets, both locally, regionally in Africa, and globally. So we do bring speakers and experts to guide the discussions. And this particular year, we are looking at adaptive innovation as a really a key thing towards sustaining capital markets, and a lot of focus around technology and the disruption it's causing. Now, these are very relevant conversations because Africa today is a very key market internationally, and we need to embrace what's going on at the global scale. And we can only use this platform to be able to understand what are those new products, initiatives that we need to undertake to make Africa a very competitive space in terms of the global capital flows. The other thing it does help provide a platform for networking and trying to enhance cross-border trade among various markets. And so the players during this convergence are able to share and network and create relationships that we want to also to achieve to make Africa a very attractive destination. I think back to your point about our efforts to integrate the East African markets, I think that is still on course. We are doing a lot of work around harmonization of regulations within the region, and a lot of progress has been made towards that direction.